Welcome to This Explainer. Today, we're unpacking something that literally touches the wallet of every single citizen and business in Africa's largest economy. We are demystifying the Nigerian tax system. By understanding the structure behind all these numbers, we actually unlock a massive piece of the puzzle of how a society really functions.
Our source materials say opens with a brilliantly honest quote. No one pays tax with a smile. And let's be real, it's universally true. Even though taxation is the main engine making the private sector pay for public services, absolutely nobody loves watching their hard-earned money leave their bank account. But as we're going to see, it's the fundamental fuel for shaping economic activity and financing social welfare. So, here's our roadmap for today. We'll be covering this in 5 parts: the price of society, the Nigerian tax machine, how we are taxed, the multiplicity problem, and finally, amnesty and forgiveness. Let's dive right in.
Part 1. The price of society. The social contract. When defining a tax, the two absolute most important words here are compulsory and without reference. A tax is definitely not a voluntary donation, and crucially, it's paid without reference to special benefits conferred. Basically, that means you can't just refuse to pay your income tax because, say, you didn't personally use the public hospital this year or you didn't drive on the newly paved highway. It doesn't work like that. It's a collective pool for the common interest.
Now, a really crucial point here is understanding the difference between a general tax and a specific levy. While taxes go into a giant general bucket for the public good, a levy is much more of a transaction. Think of court fees, right? You're paying for a specific government service that you are actively using. Or think of a traffic fine. That's a penal levy imposed because you broke a rule, not a general revenue-generating tax. And, the Nigerian tax system didn't just appear overnight. It has evolved massively over the years. Dating all the way back to 1904 with Lord Lugard's community tax, we see these major milestones. There's the Comprehensive Income Tax Ordinance of 1943, the big intervention against multiple taxes in 1998, all the way up to modern, highly sophisticated tax amnesty programs like VADES in 2017. It's a living system, constantly in flux.
Moving on to part 2, the Nigerian tax machine. How it works. So this machine operates on a tripartite system, basically 3 distinct pillars. First up, there's tax policy. These are the government's broad intentions, like, say, deciding to shift focus from income taxes to consumption taxes. Second, we have tax laws. This is where that policy becomes binding legislation, handled by the National Assembly, laws like the Companies Income Tax Act or the VAT Act. And finally, tax administration. This is the practical, boots-on-the-ground enforcement and collection carried out across the federal, state, and local government levels.
Now, what's really interesting here is how our source defines a concept we hear all the time: a tax cut. When politicians talk about tax cuts, it usually sounds like they're handing you a gift, right? But the text makes a really vital philosophical distinction. A tax cut simply means the government is taking less of your own money. It empowers the citizen to make their own choices with their wealth rather than the government making those choices for them.
All right, part 3, how we are taxed. Classification.
Broadly speaking, taxes fall into 2 main buckets: direct and indirect. Direct taxes, like the pay-as-you-earn system on your monthly salary, are levied right on your income. They're highly equitable because the wealthy pay more, but, they can sometimes discourage hard work. Indirect taxes, on the other hand, like value-added tax, are levied on goods and services. These are way harder to evade and are fantastic for government revenue, but they can definitely drive up the cost of living for everyday consumers. Now, the actual burden of these taxes is felt in 3 distinct ways. First, proportional means everyone pays the exact same percentage, like the company's income tax. Then there's progressive, meaning the higher your income, the higher your tax bracket. That's the personal income tax system. And finally, regressive. This one is fascinating. Flat rates like VAT are actually considered regressive. Why? Well, because a 7.5% tax on a loaf of bread takes a much, much larger chunk out of a lower income earner's daily wage than it does a millionaire's. Make sense? Which brings us to part 4, the multiplicity problem, the chaos.
So the Nigerian constitution splits tax administration across the federal, state, and local tiers. But because of underfunding, local governments often get incredibly aggressive, and that leads to overlapping duplicate taxes. We're talking entertainment tax, road tax, street closure permits, refuse taxes, market levies, loading and offloading levies. It's wild. Some local governments are actually on record as having over 100 different taxes and levies. As you can imagine, it completely overwhelms businesses. And honestly, the real problem isn't even just the sheer number of taxes, it's how they're collected. The source details some highly unorthodox, really visceral collection methods. Local revenue agents are known to mount physical roadblocks, throw spikes onto highways to force trucks to stop, and literally impound spare tires or motor jacks right there on the spot if a driver can't produce a specific levy receipt. This causes massive bottlenecks for inner-city commerce and severely damages the whole economy.
This chaos became such a national emergency that the federal government finally had to step in. In 1998, they introduced the Taxes and Levies Approved List for Collection Act. The entire purpose of this legislation was to draw strict boundaries, clearly outlining exactly which tier of government is legally allowed to collect which type of tax. It was a major attempt to bring some order to the Wild West of local tax collection.
And finally, Part 5, Amnesty and Forgiveness, the olive branch.
Now, before a government can offer any kind of amnesty, it actually needs to know who is in the system. Enter the TIN, the tax identification number. It's a unique 9-digit code assigned to every taxpayer. The goal here wasn't just to hand out numbers, it was to create a massive interconnected web, sharing information across all tax authorities in Nigeria so revenue generation could be tracked efficiently at all levels. Once that tracking is in place, the government can actually offer a deal.
And that deal came in 2017 with VADES, the Voluntary Assets and Income Declaration Scheme. This was a massive, time-limited amnesty program. It basically said to citizens and companies, look, we know you haven't been paying. If you come clean right now and voluntarily disclose your hidden assets and income from the last 6 years, we will work with you. The incentives to participate were just incredibly powerful. If you stepped forward under VADES, you were granted complete immunity from criminal prosecution and tax audits. All those massive accumulated interests and penalties wiped completely clean. They even gave defaulters the option to spread the payment of their newly declared outstanding taxes over a 3-year period. It was literally a golden ticket to legitimize wealth.
VADES was actually so successful for domestic assets that the very next year, in 2018, the government introduced its international sibling, VOARS, the Voluntary Offshore Assets Regularization Scheme. Now, while VADES looked back 6 years, VOARS looked back an astonishing 30 years. This was specifically targeting wealthy Nigerians who had been hiding assets and income in foreign jurisdictions and offshore accounts.
But the mechanics of VORs were slightly different. It all relied on one key number, 35%. To regularize decades of hidden offshore wealth, the government required a one-time levy of 35% on all declared offshore assets. You pay this huge single chunk, and in return, it acts in lieu of all the outstanding taxes you really should have been paying over those 3 decades.
The real prize for paying that 35% was a permanent waiver of criminal prosecution and total immunity from audits. But honestly, the most vital benefit was the freedom to use and invest those regularized offshore assets absolutely anywhere in the world. That included bringing them back into the Nigerian economy safely, without constantly having to look over your shoulder for the taxman.
And that brings us to the ultimate question. We've explored the laws, the chaos, and the amnesties. But remember the social contract we talked about at the very beginning? If taxation is the compulsory civic duty we owe to society, whether it's direct, indirect, proportional, or progressive, does fulfilling that duty give us the absolute right to demand a higher level of accountability from the institutions spending that money? It's a dynamic tension that defines every modern democracy. Thank you so much for exploring this with me today on This Explainer. Keep asking those tough questions, and I'll catch you next time.